Happy Friday, traders. It's 8:01 a.m. Chicago time on the 7th of June, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a big day. Non-farm payrolls came out this morning with a pretty decent sized miss. The non-farm payrolls reported 75,000 versus expected 175,000. What's interesting when you look at the numbers is the prior change, meaning the prior month for April. The drop was actually pretty decent, 263 to 224 on the non-farm. Private payrolls dropped from 236 to 205, almost like the Department of Labor sandbagging and then pulling back the numbers once the month is over. But overall, we missed on the non-farm payrolls. We missed on the private payrolls, but the unemployment rate remained in line at 3.6%. Still historically low, lowest level since 1969. So the song from Bryan Adams comes to mind. But in any case, the reaction was actually relatively muted. We had a quick pop up, which unfortunately, in responding, I bought and ended up losing on that trade in the ES, and the response was a pop higher. It looked like it was taking that as a positive input in terms of the Fed acting. And then it came off, and just now at about 7:50 Central, we got a further headline that the U.S. is giving some China products some additional time before tariffs are increased. Will delay tariffs until June 15th for some goods, and the market popped higher and has pushed highs. In fact, the market pushed into the key figure for the day in the ES, which is 2860, the MC point of control. Lots of liquidity there. We'll look at that in a second. Risk is clearly on today. The Russell and the S&P are trading inside of the prior day's range. We did extend the range up overnight across the board. Really, the Russell hit its high from yesterday. Missed by 2 ticks, and the NASDAQ's trading higher than yesterday's range. So clearly risk on. The Euro stocks leading the pack up 36 points or 1.08%. Interestingly, the bonds are up a handle and 5 ticks, quite a bit, up quite a bit today, 0.75%. The DAX is up 77 points. And then crude oil comes next at 52.91. Crude oil had a pretty decent pop yesterday. Had a pretty decent pop yesterday and continued to run up into the overnight session and has pulled back a little bit. The 10s are up 17 big ticks, and the NASDAQ's up 27.75. So really the only things that I see are off are the U.S. dollar again, trading at 96.55.5, and which is down 43.5 cents, and the SIBO volatility futures are down just 2 cents. Seems like everything is up. Everything is a go. In any case, happy Friday. So it's one of those days where it's going to be a little bit puzzling to see what the market's true intent is. It seems like everything's heading in the same direction. In terms of what we have that could interrupt the auction going forward, the big things behind us, the non-farm payrolls, and then what is left today is wholesale inventories at 10 Eastern, expecting 0.7% on wholesale inventories. That takes us into the weekend. Okay. Balance of trade is due from China on Sunday night at 11 p.m. Eastern. And that brings us into Monday. Let's take a look at what we expected yesterday. Here we go in the review segment. Yesterday, the primary scenario was looking for a dip down into 28, 23.50 or so for a pushback up above the range. The expectation is an open above the range. We did end up with a weak high on Wednesday, and the expectation is for a push into 26.43 and balancing. Here's what actually happened. Quite an open auction. Very, very, very choppy in here. Look at this. It's just a mess right in here. Just a lot of back and forth. Let's clean this chart up a little bit just to see. So we can see right from the open, quite a mess. It does extend the opening swing low, which is here at 25. It does extend it down into the prior day's value high. We get a small pop, and then we continue to chop, chop, chop. And then after a while, we start to push, and we get our target at 28.43 right there. The market has a very shallow pullback and then continues into 53, which was unexpected. Did not think it would push that far. We have a double distribution profile. A double distribution profile with the split in between at 28.37. 28.37 today is important to watch if we go back there. We did not move volume to the high. The high seems a little weak, but the point of control remained down at 28.29.50. So yesterday was a double distribution profile. It's a normal variation day. It's what's called a normal variation day. Nothing exceptional there. We're currently trading at 28.55, just above. Pretty big rally. Take a look. Here's what we've done so far. I mean, we've really pushed and squeezed a lot of bears. You can see that from the doji low that we put in on Monday, we've had some pretty bullish bars going up into yesterday. We've pushed through the mid of the last swing high. We've pushed it through some key areas again, 28.42, and continue to truck along. This is another instance of a market dipping and then buyers coming in to buy bargains. The Fed was very quick to respond with, hey, we'll just, reduce interest rates if necessary. The market likes that. And so that's where we stand currently. It looks like it's likely to continue squeezing shorts. It's likely to continue squeezing shorts, and I'm not seeing, it is a neutral day. Good call. Neutral day. We did take out the IB low by a couple ticks. I did forget that. It was very small. And then we pushed the IB high. Thanks for that. In any case, double distribution profile and coming into a pretty big area up here as we review this. I know these stock zones make things look a little noisy, but we are pushing into this big balance. Remember, 28.60 is the balance zone from back here. This red profile, it's this big area that we were bouncing back and forth in through a good part of May. The point of control of that's 28.60, and we are trading into Wednesday, May 22nd. Right now, this is where we are. This is the template day. We filled in the gap that existed between the 23rd and the 22nd. And the market is just very cleanly auctioning up. One time framing up, higher lows, higher highs, with the point of control shifting higher as expected. The overnight session. Where's my overnight chart? Hang on. Overnight. I must have closed it. Yeah, I did. There we go. Da-da-da-da-da-da. Not many viewers today. I guess it's a Friday, summer Friday, so people are off. Here's the push on the tariff news right there, extending what was a very blunt a very blunt profile earlier, unfinished to the top side, and now seems to have tapered and seems to have found an excess high and is trading back at the point of control. The volume is really good in the overnight session, 330,000, and all we've done is we've pulled back and have just trended up throughout the overnight session until the non-farm payrolls release. So this is a pretty solidly bullish overnight session. With the low where the low is right at that 37 even, which is a single print, and the low volume node. So there it is. This is where we stand currently. We've pushed into 2860, as I said. There's not much to read here, to be honest with you. It really is a tough read today, in my opinion. What do we have for today? Now, before we do that, y'all know, oh, what's going on here? Y'all know that it is Friday. It is Friday. Please take a moment to hit the like button on YouTube before you leave. That would really help. What is going on with these things? That would really help. Let me move on to the current situation. Let's take a look at the 15-minute. Let's kill these levels. We don't need them. Take a look at the stock zones. So today, what are we looking for?
White House says long way to go in Mexico.
Long way to go with Mexico. We're trading right into the prior day's range against the overnight point of control. The expectations for an open auction that drifts lower, actually back into the 28.43 to 28.45 area. Looking for a pop higher. And then for the market to push back up into 28.60 on the day session to test that out. And the extreme is likely to be 28.66 or so before we drop into the weekend. Likely to have a pretty decent correction at the end of the day as we push into the weekend. That wouldn't be too surprising. The secondary is an open auction that drifts higher, pushes into the overnight high, is unable to get through 28.60, fall back into the range, and then start to drift down into this 37 area as the market corrects the most recent action. We've had basically 4 rally days in a row, and we might see the book balance out before the weekend. The weekend is likely to bring more news as we move on. Okay. Which software do I use for trading? It's right up here. Right up here. This is what I use for charts. Anyway, good luck today. It is Friday. Please hit the like button, and I'll catch you on Monday morning. Be safe. Be frugal with your risk. Take care.